Imagine a company that doesn't just make medicine, but changes lives, treating one of the world's fastest-growing diseases and turning that mission into billions in revenue. This is Novo Nordisk, the quiet giant from Denmark that has become the undisputed leader in diabetes care worldwide. And yes, this stock trades right here in the US. On the New York Stock Exchange under the ticker symbol NVO, headquartered in Denmark, Novo Nordisk operates in over 80 countries, with a workforce of more than 77,000. But it's not just size, it's market dominance. With a market cap of nearly $292 billion and an enterprise value over $303 billion, Novo Nordisk isn't just big, it's powerful. But size means nothing without value. So let's look at what investors are paying for. The trailing PE ratio stands at 19.91, and the forward PE is even lower at 16.40, a clear sign that Wall Street expects future growth. Other metrics: a price-to-sales ratio of 6.65, a PB ratio of 14.55, and a price-to-free cash flow of 24.82. Yes, it's expensive, but investors are paying for quality. Now, what about profits? This is where Novo Nordisk becomes a beast. With a gross margin of 84.65% and an EBITDA margin above 51%, the company converts over half of its revenue directly into operating profit, a return on equity of nearly 88%, and a return on capital employed over 58%, and you've got one of the most efficient businesses in the entire healthcare space. Let's talk raw numbers. Novo Nordisk generated $43.92 billion in annual revenue, with $15.16 billion in net income. And it's not just paper profits. The free cash flow hit $11.77 billion, showing real, bankable earnings. Of course, profits are only half the story. What about the balance sheet? With $6 billion in cash and $17.2 billion in total debt, the company's financials are sound. The interest coverage ratio of 41.95 tells us one thing: debt is not a problem. Now let's talk about the stock itself. With 4.44 billion shares outstanding and a float of 3.18 billion, this stock is highly liquid. The short interest is only 0.79%. That's a bullish signal. And the RSI of 52.43 shows that the stock is neither overbought nor oversold, right in the sweet spot. Analysts expect 14% annual EPS growth and 12% revenue CAGR, meaning the growth story is still alive and well. Novo Nordisk is more than just a pharma company. It's a global healthcare machine, printing profits and redefining treatment for millions of people. It's expensive, but for good reason. Just remember, every great stock has its risks, so always do your own research. If you found this breakdown helpful, hit like, smash that subscribe button, and drop a comment below. Would you invest in NVO right now?